Welcome to the future of banking, where data drives innovation and customers are in control. Open Finance is transforming the financial landscape by enabling secure data sharing between banks, fintechs, and other financial institutions. This next evolution of open banking empowers individuals and businesses with greater transparency, personalization, and financial freedom. In this session, we'll explore how Open Finance is unlocking new opportunities, reshaping financial services, and putting the power of data back into the hands of the consumer. Today, we will talk about Open Finance, the future of data-driven banking. So before we start, make sure to hit the like button and subscribe to my channel. 1. Introduction to Open Finance and its evolution from open banking. Open Finance represents the next evolutionary step in the digital transformation of financial services, expanding the scope and potential of open banking. While open banking enables third-party providers (TPPs) to access a consumer's banking data, like account balances and transaction history, through secure APIs, with the customer's consent, Open Finance broadens this access to include a wider array of financial products and institutions. These can range from savings and pensions to mortgages, insurance, investments, and more. Essentially, Open Finance aims to create an ecosystem where consumers are in full control of their financial data, regardless of the type of financial service or product involved. The roots of this movement can be traced back to regulatory initiatives like PSD2, Revised Payment Services Directive, in the European Union, which mandated banks to open up their data silos to promote competition and innovation. Open Finance is not only a technological shift but also a philosophical one. It treats consumer data as a rightfully owned asset, empowering users to move it freely, securely, and transparently. 2. Core components and architecture of Open Finance. The architecture of Open Finance is built upon key technical components like APIs, application programming interfaces, data standards, consent frameworks, and robust security protocols. APIs serve as the central infrastructure that allows fintechs, banks, insurers, and other financial institutions to securely communicate and share data. However, Open Finance goes beyond just making APIs available. It necessitates standardized data formats and interoperability protocols so that different systems and platforms can effectively work together. Consent management is another cornerstone, requiring mechanisms through which users can grant, revoke, or manage data sharing permissions across various services. Emerging technologies like blockchain and decentralized identity are also being explored to bolster security and give users more granular control over their personal information. Regulatory bodies, such as the UK's Financial Conduct Authority (FCA) and Brazil's Central Bank, are increasingly focusing on these infrastructure components to ensure scalability and resilience in open finance ecosystems. 3. Regulatory landscape and global implementation. Around the world, the pace and style of open finance implementation vary significantly based on local regulations, market maturity, and consumer demand. In the UK, the Financial Conduct Authority (FCA) is spearheading the shift from open banking to open finance through initiatives like the Open Finance Advisory Group. Similarly, Australia's Consumer Data Rights (CDR) has been designed to give consumers greater control over their data across a range of sectors, starting with banking and expanding into energy and telecommunications. Brazil and Mexico are also pioneering open finance frameworks, focusing on financial inclusion and innovation. Meanwhile, the United States lacks a centralized open finance regulation but sees activity from private sector collaborations and the Consumer Financial Protection Bureau (CFPB), which is developing data access rules under Section 1033 of the Dodd-Frank Act. 4. Benefits for consumers and financial institutions. For consumers, Open Finance can offer a significantly improved, personalized, and convenient financial experience. Imagine a single dashboard that aggregates all your financial data: bank accounts, loans, credit cards, insurance policies, investments, and pensions, into one unified view. Such visibility enables better financial planning, faster loan approvals, and smarter investment decisions. Consumers can receive customized product recommendations, budget analyses, or automated savings suggestions driven by real-time data. On the other hand, financial institutions stand to gain from the ability to better understand customer behaviors and preferences, enabling them to offer hyper-personalized products and reduce churn. Risk assessment processes can also become more accurate, reducing defaults and improving credit underwriting. Open Finance drives efficiency, allowing institutions to streamline back-office operations and reduce manual interventions. Additionally, it fosters competition and partnerships between traditional banks and agile fintechs, resulting in better services and lower costs for end users. Paragraph 5. Challenges and risks in the open finance landscape. Despite its promise, open finance comes with a set of complex challenges and risks. Chief among them is data privacy and security. With vast amounts of sensitive information being exchanged across numerous platforms, the risk of data breaches and unauthorized access grows exponentially. Ensuring end-to-end encryption, robust authentication methods, and frequent audits is crucial. Consent fatigue is another concern. When consumers are repeatedly asked for permissions, they may either disengage or accept terms without understanding them fully, thereby weakening the very foundation of consent-based data sharing. There's also the question of data literacy. Many consumers may not be equipped to interpret or manage their financial data effectively. 6. Key use cases and real-world applications. Numerous use cases have already demonstrated the transformative power of open finance. One prominent example is personal financial management (PFM), apps that aggregate and analyze user data to provide spending insights, budgeting tools, and savings advice. In lending, open finance enables alternative credit scoring, using transaction history and spending patterns to assess creditworthiness, thus improving access to loans for thin-file customers. Robo-advisors leverage data from across investment platforms to provide algorithm-driven investment strategies personalized to user risk profiles. Insurance companies are integrating open finance to offer usage-based pricing models, such as pay-as-you-drive auto policies or real-time health insurance premium adjustments. 7. The role of emerging technologies and innovation. Emerging technologies play a pivotal role in realizing the full potential of open finance. Artificial intelligence (AI) and machine learning (ML) are integral in analyzing vast troves of financial data to generate actionable insights, power chatbots, automate fraud detection, and refine credit models. Blockchain introduces the concept of decentralized finance (DeFi), where financial services operate on peer-to-peer networks with smart contracts, offering a transparent and programmable alternative to traditional finance. Decentralized identity systems aim to give consumers control over their digital identities, allowing them to share only specific data attributes rather than full datasets. Cloud computing and data lakes support the massive storage and real-time processing requirements of open finance platforms. 8. The future outlook and strategic considerations. Looking ahead, the future of open finance is poised to redefine how value is created and delivered in the financial sector. As digital native consumers demand more transparency, flexibility, and convenience, open finance could become the standard mode of financial engagement. However, achieving this future requires harmonized global standards, cross-industry collaboration, and a consumer-centric regulatory environment. Stakeholders, including regulators, tech providers, and financial institutions, must align on data governance, ethical AI usage, and sustainable innovation. Additionally, there must be a commitment to digital inclusion, ensuring that open finance benefits all segments of the population, including underserved communities. Open finance could also converge with other open ecosystems, like open health and open energy, to offer truly holistic digital lives for consumers. In this future, financial institutions may transition from being product providers to platform enablers, orchestrating a broader value chain driven by data. If you like this video and would like to see more like it, please give it the thumbs up. Leave a comment and click the button to subscribe.